There we go. Perfect. Okay. So first and foremost, we're gonna take point in many different ways today.
What's up,
Okay. So
Waterman? Can you hear me?
yo, what's up? Is that you, brother? Grasadi?
I think
Yeah,
I
there
think
we
your
go.
mic cut out because we can't hear you anymore.
Oh, did my mic? Oh, okay.
Yeah, for sure.
Guys, is that working now?
Yeah, it works all. I can hear you again.
Okay, great. If it cuts out again, please someone just speak up because I'm using my inner headphones for some reason. It just absolutely like turns off for no reason, so I have to like reset it on Discord randomly. But yeah, thanks for that, bro. Okay.
Yeah, sure.
We're going to look at Bitcoin in a multitude of different ways today, okay? I'm not done with this with you guys in a while. Last time I did this is more than actually probably close to a year now. I've only shown you horizontals. I've not shown you diagonals. Let's scare you guys again. Right, we're going to look at diagonals. We're going to look at horizontals in many different ways. Let's just thoroughly look at Bitcoin today, okay? To begin with, and then after this, we'll take a look at some other coins and stuff. Take it from there. So to begin with, what you guys are used to, right? Our key levels. Let me turn that on. Where is it gone? We find it. I've got way too much stuff in here. There you go. Right. Same levels we've been looking at, right? Because these are all levels we got off previous cycle, not this cycle. Your significant levels, you should not need to change them every day, right? These are the same, literally the same levels I've been working with since these tops came, right? And this 6 month that was put in. So with that key level, what did we do? The last time we were looking at this, I believe it was a week ago. So from here, 2, 3, 6, we were looking at this, right? We had this pullback. We were saying, look, if this 3 month is lost, which we did lose it, then we're going to go towards that 2 month monthly low at 61,357. As long as you can stay above that, we're fine. This is a nice area for a higher low, right? If you get below this, then 58,787 to 57,596 was your line in the sun, right? This is the area you do not want to get below. You do not want to get below this, okay? You get below this, you just lose all arguments to be bullish, okay? And that's on a local scale. Of course, if we're talking monthly, then yeah, anything, even 46K is bullish if you're talking monthly, 2 months, 3 months. But we're talking local scale. This, as long as you're below this, I'm in no positions, right? In terms of adding and spot, I'm talking leverage, right? On spot, yes, I'll hold. On leverage, no, we just cut because you don't know when your next lower low is going to come in, right? So this was really good because we took out, obviously, right? If you're talking trend, for those of you that are very much beginners, if you're talking trend, how do you know when you might be getting a potential reversal? Is when you go take out the last significant lower high and then you put a higher low in, right? That's the kind of market structure shift that you're looking for. You've taken out the last significant lower high, and for now you have put in what looks to be a high low. Now this candle is pretty ugly. And this candle is pretty ugly. Obviously, it's ugly. What you're doing, you're going back to that 3 month mid, like the 4 month mid, quarterly mids from previous cycle, and you're turning into resistance again, right? You don't want to be seeing support, resistance, right? Support, resistance, resistance, support. This is very, very significant resistance. What happens if you turn this to resistance? Well, many times you get pullbacks back towards the 2 month low, and more time you actually exceed that and go lower, right? So that literally happened last time we turned this to resistance as well. So if we keep turning this to resistance, then we might get one more pullback towards 57, 57, right? That's what I'm going to say next. I'm not going to tell you what's going to happen from here because we can't pretend like we know, right? We either bounce, and if we bounce, then I can tell you, yeah, our next targets are back towards, 68K and 75K. If we don't bounce, then we're just going to go lower. We'll have to look for levels then, right? But for now, getting above this, the BTC chart is going to look infinitely better above 63,393. Okay, that quarterly mid is going to look infinitely better above that. So that's that in terms of levels you guys are used to, right? That's that in terms of levels you guys are used to. Now, why did we go down where we did? Let's do this bit by bit. Why did we go down where we did? If we're talking current cycle, again, 6 month firstly, you have your 6 month seller zone right over here. And I already explained what my seller zones are in previous streams. I'm not going to do that again. But let me just turn these on bit by bit. Okay, so current cycle, first of all, we have this, right? The 6 month seller zone low, the 6 month seller zone mid, and the all-time high, obviously, right? You're also below your previous biannual low. Okay, you want to be getting above this, obviously speaking. When you get back above and confirm with strength, you break back above 62,722. I'll be the first to tell you we're going to go towards 68K. Okay, I don't think we're going to get a level higher like 65 or something random. I think we push to 68K when we get back above 62 next. Okay, but if we don't and we keep staying under here, then we obviously go lower. And we lost that 6-month seller zone low. Where did we go down to for a bounce? If you go to the quartz, if you go to the triannual, the 4-month, this is your 4-month seller zone, right? Again, a candle where buyers are in control, while marking out the area where sellers took control back from the buyers, right? 3 significant SR levels based off that. If you look over we dumped to now, you know why we bottomed out here, right? Look, no candle body closes below that. This was very significant, right? Your current cycle, 4-month seller zone low, once, twice, thrice, 4 days in a row, sellers tried to close below, but for 4 days straight, buyers defended, right? You kept closing above, which is why you got this impulse back up here. So your next state of affairs is look, do something like this. As long as you can reclaim this 6-month seller zone low, I think it's going to be quick work to then go towards this 4-month seller zone mid to 6-month seller zone mid area here, which again lines up very nicely, right? That's the general area where we were looking for our, not this, where's it gone? This one. No, where's it gone? One sec. I had a, oh no, group page. There we go. Right. It lines up very nicely. The general area with our 786 for the Gartley, right? And if you can flip that into support, just send it straight to 75K, right? Go towards the butterfly. We will reassess as we get to those levels. But for now, I don't think Bitcoin looks trash at all. I know many people are bearish. There's no reason to be bearish when we're trading at the range we are, literally zero, right? This is very minute in the grand scheme of things for now. Like, you could be telling, sure, this could turn into something, but until again the key levels are lost, this isn't going to translate to anything, okay? Because if you now take the same approach, right, we get rid of this, we just get rid of that, and you again take a look at the higher time frame, take a look at where we are, right, the monthly, the 2 months, the 3 months, take a look, especially on the quarterly, right? This looks beautiful, the quarterly and the triannual. You haven't closed below, right? Areas where sellers were in complete control before is currently an area where buyers are in complete control. There is nothing bearish about this. Okay. There is absolutely nothing bearish about this. Look what you're saying. Every time you tried to get into this zone before previous cycles, sellers didn't let you close kind of bodies here, right? So on these time frames, the 3 months, the 4 months, this area has been an area where sellers have been in complete control. No ifs, buts, or maybes, complete control, no room for negotiation. And now you see the exact opposite happening. Buyers are in complete control. Sellers go here, rated the highs, right? You tried for 8 months straight, right, to close price below, right? Look, this and this. Well, not 8 months straight, but for if we go to the triannual, it's closer to 3. For 6 months straight, right? You've tried to close price below, but for the entirety of that 6 months, look, you've closed above, right? That is serious strength on a serious time scale, right? You do not just fade this and be like, oh yeah, we look so bearish. There is no reason for you to be bearish. And look, I'll be the first person to tell you, right? Ultimately, if you go and turn these lows into resistance again, right, then I'll be like, yeah, maybe the argument for upside isn't quite there, right? And I'll be the first person to tell you that, okay, look, on the 12 months, now we have the low of the previous seller control zone, 46,195. That might be a potential target. We might go there. But we just haven't had any significant candle body closes below this area for me to even be saying that, right? Not on the particular time frames you're looking at, not on the 3 months, not on the 4 months. Any week we had on time frames lower than that, right? Even on the monthly, not right. So it's literally the weekly. Any weeks we had went to grab liquidity from valid liquidity pockets, and you just went back and reclaimed the range, right? So Bitcoin looks great. You're literally just trending. You're literally just ranging, and more importantly, you're literally this is what you have to call time-based capitulation, right? You've been here for nearly a year. Those are people have been chopped out, literally in this tight ass range. Probably close. Just think about all these red candles. Just think about all the messages you saw. How many hundreds of millions got wiped out in open interest in off the crypto market, right? This has just been a huge, huge like manipulation where you just have been time-based capitulated all the while on the higher time frame. You've not lost your significant levels. This is what you call a forced transfer of wealth, right? The leverage traders are constantly losing money, and that's all going towards the spot traders. And that's what's happening here. So this is strictly in terms of horizontals, but I said today, let's look at this deeper, right? So that's our horizontal levels. Next, let's take a look at some fibs, right? We're going to take a look at some fibs. Firstly, let's take a look at our macro trend-based wave extension. I'm gonna start with macro before I work my way down, right? Here, that's my macro. And again, this is a quick tip for you, for you guys. And this is something I normally only share with my students, but I thought why not just mention this. If you want to know your most valid fib pools, okay, don't look for the current cycle, look for the previous cycle. Okay. I like to call this the last completed macro wave structure. Your last completed macro wave structure is always going to give you the most valid fib levels for the current cycle. And the thesis for this is because this cycle is incomplete, right? We don't even know if this is the top. We don't know how much higher we're going to go. We don't know if this is the top. We don't know where we're going to bottom, right? Data is incomplete here, but over here you have a full picture, right? You have a low, you have your valid highs and lows throughout, and you have your macro low, high, high, low as well. Last completed wave structure is always going to give you the most valid fib pools, whether that's diagonals or whether it's horizontals, okay? So with that in mind, firstly, let's take a look at this in terms of, let me do it like this. Let's do it in terms of a trend-based extension to begin with, low, high, high, low, right? Again, you cannot be bearish on this. What have you done? To me, this is liquidity rate of range extreme, right? You've hit the liquidity rate of the range extreme. You're holding your golden pocket. You're holding the liquidity rate of your golden pocket. You're literally consolidating at your deep value area, right? Sure, if you want to build shorts, you're saying now, yeah, you're in deep value to try and take those shorts, and you had loads of opportunities to build shorts, right? But what you're saying is, as long as you can keep holding these levels as support, you are eventually going to carry on going higher. Because what you're doing is you're making higher highs and higher lows, right? Look, you haven't significantly lost the golden pockets. You haven't even, right now, you're literally still above the golden pocket front run slash liquidity rate. You're going to go higher, right? If this carries on, you're going to go higher. Sellers need to take control and drive price down if you want to, attempt to make another lower high, lower low, right? But until you lose some key levels, like for example, you lose the 702, 707, right? You lose that zone. We can talk about, okay, right? Maybe we go to 55K next. You lose that, we can say, okay, maybe 48K is in the cards. Lose that, we can be like, okay, 42 to 37K is in the cards. But you need to firstly have actually lost these levels, right? If you don't lose these, there's no point waiting for these deeper pullbacks. It's not going to happen. Okay? And for me personally, I think if we do get the next breakup, right? For that next breakup, I'm just going to do this, this, do this, and then now it's going to be, I'm going to extend it. I'm going to extend the fib, low, high, high, low. I'm eyeing the 1.414 for now. Okay, as a macro top, we'll see. If you go past here, of course, you've got plenty of reasons why you could go past. But for now, I think you get here, you chop around over here some more, and then you break back up. 1.414. If you can get above this, then sure, maybe you go towards the 120K Bitcoin range. But for now, I'm gonna be saying, okay, pit stop at 107, right? For now, let's say this is gonna be around where you macro top. This is just a prediction, right? It could go high, it could go low. I'm literally just saying it. I'm saying it based off levels I see on my screen. Okay, the 1.414, this is what I'm watching for now as a target to the upside, right? And if for example, if we were to do this low to here, I'm not actually sure, I've not tried this yet, but then you were just to see, okay, at the point of breakout from the lowest we've been, that would be valid, right? That would be valid. If you consider this a flag structure, that'd be valid. So we have this, we have this in terms of trend based extensions. Again, this is just a macro. That's why I'm putting this down. I'm not going to go through all the different fib levels you could have pulled for this area. Right, there's loads. If you look at the last completed wave structure again, you can see all the different pivots you can do: low, high, higher, low. Right, low, high, higher, low. Low, high, higher, low. You have a high, low, lower high, low, lower high, low, lower high, and then obviously the one we just looked at, low, high, high, low. There's loads of different for trend wave extensions you can do. Okay, loads. So last completed wave structure, any of those fib pools is just as valid as the other. Obviously, going for the macro is going to be much easier on the eyes, which is why I'm going for the macro. In the same vein, right? In the same vein, if you now take a look at the fib retracement, right? So again, I'm just going to go high time from 0 to 1 from this low to this high, right? Obviously, that was our macro for the last bull run. And Better yet, you know what? Let's do it this way. Instead of going for that, let's go for this. Let's go for the technically we're reacting now to this. So here is our bear market Fibble, right? So this is the downtrend of the bear market. And all I'm going to do is I'm going to draw another one. And again, oh wait, I'm going to select this, do this. I'm going to go for 1 to 2, basically. Okay. Again, liquidity rate of your range extremes is where you topped out so far, right? Based on the previous Fibble. And again, look, your dump is to the golden pocket. You've not lost it, right? Major support at the front run slash liquidity rate of the golden pockets. And what you're currently consolidating is, again, the front run of your range extreme. Right? Obviously, if you're going into this, it's a front run. If you're coming down into this, it's a liquidity, right? Either side of mark the zones out. As long as you hold this, again, higher, right? You're 1.414, 91K. And in this case, I'm looking at the 1.618 to the 702, 707 zone. So again, up here, right? So we've got trend-based fib extension confluence, right? We looked at that there. We also have fib retracement, fib extension confluence, right? It's a retracement, but I'm using the retracements to give myself an extension, right? We've got confluence with that all the way up there too. And again, look, if we do end up putting a higher low here, for example, and we do get reaction of this, right? We rate these. All we need is, we might not even get a higher low, but even if we get some sort of higher low like this, these are going to be the targets you're going to go towards. There is no resistance to the left. It's going to be a quick melt up. Okay, it's going to be really, really quick. I'm talking like 30, 40% in a month, kind of quick, right? So that is, in terms of fib retracements and trend-based extension, just the macro. Okay, I'm going literally with just the macro. I'm not showing you guys all the different fib pools I have or anything like that. That's going to be too confusing for many of you. Too many lines on the screen. So I'm just doing this bit by bit, right? So that's fib retracement, right? And that's why again I'm thinking 100 to 120K. Let's say somewhere around there for now. Probably where I'm expecting Bitcoin to top. If you go past it, great. Just even higher. No complaints. Next, let's look at diagonal fibs. Okay, so again, I'm only going to use macro for this. I'm not going to go on like the microstructures within the last completed wave structure. We're going to start with the fib speed resistance fan. Okay, the macro fib speed resistance fan is from this low to this high. Okay, this is what we have. For example, if I was to put this down, right? If I was to put this down, let me do this bit by bit. Let me get this. And we're going to use the deep retracements to begin with. I'll do the first students one right now. There you go. Why did we bottom out in the bear market? Right, the 87886, right, the front run of the range extreme, you bottomed out at a deep value level, right? 764786 was your resistance before you flipped it and you went high. Right, so I'm just going to keep doing the same thing. I'm going to keep putting these down, low to high. Oh wait, hang on, sorry, I forgot to change my. So we've got deep. Let's go with the range. Here's your range. Let me color it for you guys. Let me color it so that you guys can appreciate the difference. There's the 0, there's the 1, right? That's your range extreme. There's your midway point right there. Next, let's throw the golden pockets on, right? There you go. Right, okay. In terms of fans, what are we doing? Bottomed out at deep value, right? Front run of the golden pocket. So this, for me, in my system, 702, 707, I'm treating that as a front run slash liquidity rate to the 61866 golden pocket. And the same way for me, the 414 is a front run slash liquidity rate to the 34382 golden pocket. Right, so you front run the golden pocket here. What this means is people are building shorts because they think, oh damn, we didn't get the golden pocket, right? Because again, 702, 707 isn't a widely regarded fib retracement level, right? So for most people, as soon as they get up the 786, it's to the 618. They're saying, oh, we're not getting the 618. We look like we're SFing here. Anyone who builds premature shorts here, they're going to get raided, right? And you're actually going to go to your proper target, which is up here. So confirm the flip, then you went higher, right? Obviously, you've not hit the 0.5 yet. You're holding your golden pocket plus liquidity rate zone, right? You're holding this area. As long as you hold this, you're not going to go lower, right? All we need to do now is go and recapture. If we recapture the 6.6, we're going to look so much better. Because as you can see, we've been making lower lows and lower lows. Buyers haven't been able to progress the price at a rate that is demanded by these trends, right? Obviously, these diagonals are going up at a fixed gradient over time. For us to remain bullish, buyers are going to have to put in work so that we either stay in line or outperform the gradient of our diagonals, right? If we start underperforming against our gradient, we're going to start turning them to resistances, which is not something we want to see. That is a sign of weakness, right? And obviously, you wouldn't just be blindly longing to see that. This is what you want to see, right? You come down here, you're holding it as support, right? You're in line with the gradient. You can see that price is going higher as the gradient is going higher. And then you're flipping into support and then flipping into support. That's what you want to see, right? So the next leg, again, look, the 0.5, that's your next target. If you hit the 618, the 0.5 to the 0.414, even if you give yourself a target of, let's say, May, June of next year, that is, like 100 to 120K Bitcoin again. So in terms of diagonal, this is just one diagonal. You can have many diagonals. In terms of diagonals, this is just a macro. You again have a reason to expect there's the 100K Bitcoin target, right? So this is one of the diagonals we can be looking at. Again, there's many that that's the you can do many speed fifth speed resistance fans. You can do many of them, but this is the one I'm going to go with for now. So let's delete that, right? We're going to keep up. One sec. Did I delete the brush? Let's leave the brush on. Yeah, I'll delete this. I'll delete this. Yeah, and then so let's do this to this to this. Delete that. There we go. Okay. So that is the fifth speed resistance fan. And last but not least, I will give you guys one more viewpoint, which is the pitch fan. Very, very slept on. Let's look at the range first. So range, you have a low, you have a high, you have a higher low. Okay, there's your range. Where you're currently rejecting off of, right? Based on this range, you are rejecting off of the neutral point of the range, right? With pitch fans, whereas with fixed speed resistance fans, what it does basically, fixed speed resistance fans draws a triangle for your range, right? And your fib levels are basically the angles, right? The angle from your uh, the angle from your opposite over here to your hypotenuse, the angle that's created between this and this, adjacent and the hypotenuse, that is what the fib ratios are showing, right? The pitch fan doesn't do this. Okay, the pitch fan is very more similar to the trend based extension in the sense that it's giving you an extension based on trend, okay, not based on range, based on trend. So again, it just even in with just this view, right? That dump we had, you flip the 0.5 into support. You're literally flipping the midway point regarding a support. There is nothing bearish about this. Okay, absolutely nothing. You went past the mid, you confirmed you hit the range top. You now confirmed, okay, the mid is support. You're looking to go higher, right? On the macro for now, based on this, again, you're looking to go higher. So what I'm going to do, I'm going to draw a couple more and start putting the ratios down, right? So for this, let's go with golden pockets first. So we have a low, we have a high, we have a higher low, right? Here we go. Again, what are you doing? Holding the golden pocket as support, holding the golden pocket as support. You've confirmed the liquidity rate to be support, right? You're above the golden pocket, right? Above very pivotal areas. And this is the shallow range golden pocket, right? This is your 3-4, 382, and your 414. Okay. So this is shallow range. If your trend is strong, you're not looking for your deep retracements. Okay. And this is something I see many people get this wrong about fibs. Many people are very simplistic when it comes to fibs. Okay. You throw down your default, you're like, oh, I'm going to wait for the 618 to hit. I'm going to wait for the 786 to hit. No. If your trend is strong, you shouldn't be wanting the 618 to hit. Okay, if your trend is strong, you want buyers to step in at the 236, right? The 382, the 0.5 minimum. You want buyers to step in there. If your uptrend is strong, your argument that your uptrend is strong goes out the window if you're getting 786s. That's a deep retracement, right? That's deep value. That's something you would expect in a bear market. That's not something you expect in an uptrend, right? So this is bullish. You've reclaimed your shallow retracement zones, right? And you're holding it as support. If you do this, you're going to go higher. There's no question about it. You're going to go higher, right? So once again, let me put a couple more down, a couple more ratios in the same range. So let's put the shallow retracement down first. There we go. Low. Again, high. Oh wait, no, sorry. I used the fib speed fan. I'm using the pitch fan. That's what I need. This one. Shallow ratios. There we go. Low, high, and high, low. And there you go. There's your shallow ratios, right? Your front run of the range extreme, your liquidity rate of the range extreme. Once again, take a look at the dates. You're saying sometime next year, right? Up until February 2025, March, April. This is going to act as a liquidity raid to your range extreme, okay? And again, another reason why I've got those 100K Bitcoin targets, right? By May, June, latest, somewhere around there. Next year, for now, right? For now. You have plenty of reasons to be expecting the 106K. And if you extend past that, maybe 120K to like 130, we'll talk about it once slash if we even get here, right? Once you get here, we're going to be analyzing price action. We're going to be seeing, is there any divergences forming? And it's not going to be just one and straight back down. You're going to come, maybe go and put another high up, creating divergence before you really come down. Right? There's going to be some sort of structure like that building. But for now, your first impulse up, just like it was here, right? The second impulse rated, the first impulse up, I'd be looking for somewhere around the 100 to 120K range for now, right? Of course, there's loads of flip targets as to why we could go higher, but I'm not trying to I'm not going to tell you guys we're going to go 200K plus. In my humble opinion, I don't think we're going to get 200K plus Bitcoin this cycle, okay? Maybe the 2028 halving year when we have more eyes on Bitcoin, right? Especially mixing the fact we've got ETS, we've got it being talked about publicly now. And then after that, we have a bull run, right? Way more people are going to be interested for the next halving year, right? Once more people get interested, they're going to look, they're going to realize, oh, Bitcoin has halving years. Oh, the next one's 2028. Oh, this is a bullish narrative. And, I expect 2028 to be crazy for now. But for this cycle, I don't think we're going to get that 200, 300K plus people are talking about 250K Bitcoin. I don't think it's going to happen. Okay. 100 to 120K. For me, that's my target. Now, if we get above, great, right? I'm happy to be proven wrong. But for now, just more complacent targets, right? 100K to 120K. Let's give ourselves that range to work with. And if we see bullish signs there, of course, sure, we can expand our targets up. If we don't see bullish signs there, we see, signs of bearishness forming, I will be building hedges. I will alert when I build those hedges. Okay. But we looked at this in terms of now, right? Horizontal levels. We looked at this in terms of diagonal levels, right? Hang on, let me do that. Every single one of these is telling us, look, there's no reason. Your targets are to the upside. Your diagonals, your trends going up over time are being respected, right? If you were to do the same argument with downtrends, right? For example, if I was to go and put a fifth speed resistance fan on the downtrend, hang on, let me do the range to show you guys what I mean. Range. If I was to go and put the fifth speed resistance fan on the downtrend, we've already went past the one. We've outperformed the downtrend, right? We're very, very strong. That's what we're saying. The downtrend flips just haven't been that successful in keeping us down. We're obviously bullish. There's no reason to be overly bearish, right? And last, I want to take a look at this in terms of fib channels. We've not done this in a while either. I'm going to give you guys a couple of different ones, right? Firstly, your macro fib channel, very, very simple, is let me help you guys visualize this first using parallel channel. You have low to low, high to high. You are very clearly within a macro trend, right? I've not shown you guys this in a while. So therefore, fib channel, I'm going to go 0 to 1. Same thing, low to low, high to high. What are we doing? We haven't lost the 0.5. Like I said, if you're bullish, you won't buy stepping in at your shallow retracement zones, right? And if we obviously we do this based on the move up, so this is going to give us levels down, right? But hang on one second. Let me just realize, do I have a setting ticked on this reverse? Oh, I did not. It's fine. Okay. You're holding the levels you need to be holding, right? The 0.5 held as supports. The golden pocket is holding as support as we speak, right? You've not printed overly bearish market structure. So again, right? I'm expecting, obviously, you go past the one, right? Where you topped out was again a front run to the range extreme. And I'm saying front run / liquidity rates because what you find, or what I found in my own system, is hardly ever do you get perfect taps to the range extreme, right? To the 0 and the 1. That's where everyone's looking to enter. You're going to get rated or you're going to get front run, right? It's all manipulation tactics. If you get past the 1, then we're probably going to get, so past the 1, 1 to 2. Again, select the same points. There you go. Same points here, right? Past the 1, that's when you're going to go to these. Again, the 1.414 is where I'm looking at, right? Your 1.414 is right over here, right? Another reason in terms of diagonals as to why to expect this. One of the reasons in terms of diagonals as to why to expect a higher level should we get there, right? So we've got argument for 120K and 100K, right? both in this area. And again, that's just the macro, right? You have plenty of different fib channels you can put down, right? You have absolutely loads you can put down. So for example, let me give you guys a few others, right? Um, let me give you a nice visualization of this. For example, what is this, right? If you take a look at this in this sense, you have top to top, bottom to bottom, right? You had a completely valid parallel channel here and you've retested and confirmed you're back within this, right? Look, you lost it, you're back within it, right? If I was to once again select my fib channel, we go 0 to 1 first, right? High to high. Hang on, let me do that again. High to high, low to low, right? You've once again reclaimed this. Like, where did you bottom out, for example? Let me just show you. Where did you bottom out in the bear market? You could have had this parallel channel down. You could have noticed, oh, we've broken down. You don't need to panic. You could like, okay, we've gone past the 0 to 1. That simply means we're in the 1 to 2 range, right? High to high, low to low. Where did you bottom out? The 1.618, right? The primary projection of the fib channel. Reclaimed it 1.5 as support, right? Over here, you didn't stop at the 1, like I said. Look, you go to the liquidity rate, right? Hardly ever do you get perfect taps of the 1. High and low at the 2-1, the shallow retracements before you reject it again at the golden pocket. And now, again, that dump went past the 1 into the liquidity rate, right? All very bullish structure here. The liquidity rate is support again, right? This is going to look better if you can go and now recapture this level. Sure, like if now you've treated it as resistance, you go and recapture this, you're going to go higher, right? You're going to go higher. That's just another way to look at it, right? And again, if I do this and draw another one down, right? If we go higher, we're obviously going to go to new ratios. And in this case, we're actually talking inverse fibs, right? So again, high to high, low to low. There you go. Would you know? Negative 414, once again in this area, negative 707, once again in this area. Another reason, another confluence as to why that is the general area I'm targeting, right? So we've looked at this in multiple different factors. You can see whether you're talking horizontals, whether you're talking diagonals, there's a multitude of factors pointing towards this being the general area that's going to next be full of confluence for resistance, right? So we get here, we pay attention, right? We pay attention, we look for signs. Do we see weekly, monthly, daily bearish divergence building? Not daily straight away. Do we see, monthly? For me, look for 3 months, look for 4 months. Right? That's what we got last cycle. Look for 3 months, 2 months, monthly bearish divergence forming, right? And better than that, if you have 2 highs coming in, something like this, and then that second high further gives you daily bearish divergence, that's exactly what we had here, right? Then you hedge a short with conviction, right? Because then you're probably going to go back down again. You don't have to go fully here, break down, you reconfirm what was once resistance as resistance again, size up, go down, right? Obviously, this is just generally speaking. No price action is there yet. We can't be sure what's going to happen. But I'm giving you the general vibes once we get there, right? But there is, look, so many confluences as to why we're going to go high, right? Both in terms of horizontals, in terms of fibs, many different confluences. I could throw fib-based time down. I could do so many different things here, right? But I'm not going to do all that. Just wanted to give you guys a different perspective today on Bitcoin as to why you should not be overly bearish here, okay? There's no, yes, you've got the argument, you've got lower lows and lower highs, right? We've already talked about this, right? We've talked about this and, we took shorts when we needed to. But we have taken the last lower high out again, right? And again, remember what I said? Take out the last lower high, put a high low in. That's your confirmation of trend shift, right? Look, you've taken out the last lower high. If you put a high low in, that was it. And you start doing this again, you're going to go higher. You're going to go higher. And if Bitcoin does that, just that move up is going to have pumped your alts 20%, like 15, 20% from where it's currently, okay? So you're going to miss those good entries. Your risk is going to be that much harder to manage, right? On alts that are set at key areas and stuff. So let me quickly check back to the chat. I've been rambling on for a little while now. Sorry. With fibs, definitely, right? One thing I'll say, I'm not a fib purist, right? In the sense that I'm not here to tell you that fibs are sacred numbers. That's not why I use fibs. Okay, I think fibs are amazing confluence, And a big part of why Fibs is amazing confluence is because of confirmation bias. Right? Look, you tell everyone that 618 is going to be important, people are going to jump into the 618, right? So a big part of Fibs is confirmation bias, right? And anyone that tells you Fibs are sacred numbers, just don't listen to them. Okay. I don't use Fibs because of Virgo and Sagittarius or whatever, no astrology, right? It's for confluence based on the fact there's huge confirmation bias with Fibs. And if it works, right? But with my own system, like I said, that's why I use, like the liquidity rate zones, for example, 702, 707. You get those ratios by manipulating the Fibonacci sequence, right? Obviously. And once you uh, once you have that, you just look for rates of key areas. You line it up with the actual horizontal, actual market structure trend shift. It's just extra confluence, right? But of course, never trade fans on their own. Never trade anything on its own. Look for confluence where you can. Let me go through, see if yeah, the structure is amazing. Yeah, trend-based fibs is different to fib retracements, matter, because trend-based fibs is going to give you projections based on your trend, right? Whereas fib retracement is going to give you retracements based on your range. Two completely different things. Let me just keep up with the chat one sec. Yeah, taking square roots and stuff. That's how I got the extra ratios. And then there was some more. Some I thought was a bit bullshit. Didn't really work. So those were discarded. The ones that seem to hit more regularly across stocks, cryptos, forex, so on and so forth. Those are the ones I kept. These have been back tested over like the last 3-4 years, right? This isn't like a new system or anything, guys. So the ones I kept now are ones that I have faith in. Yeah. Okay. So anyway, that's just a few different perspectives, right? But obviously, I'm not telling you guys to go set limit shorts for 120K. You're just asking to get liquidated if that happens, right? I'm just telling you these are potential targets, right? These are potential targets for us. And once we get there, we're going to analyze price action around those levels. Okay, you can do this on log as well. Log is even more powerful. But just giving you a different perspective on this. Okay, anyway, um, let's now take a look at some coins. If you guys have any coins you want charted, put it in chat. Let's go over some examples. I want to go over a few more I didn't go over in the video. So a few Pith. I saw this on Pyth, Pith, however you say this. A Gartley. If you go to the daily, you have a 618, 780. It's not a 0.386 here, okay? So the C is a bit wonky because it's not an exact 386, but for me, the golden pocket is between the 3.4 and the 386. So if you're talking in terms of just market structure, you rejected the golden pocket, right? That's what you're saying here. So a informal Gartley, let's say, right? You've got an informal Gartley here on Pith, and more importantly, you have shifted market structure, right? That last lower high has been taken out, so you're just waiting for some sort of confirmation that yes, okay, the low has been put in, right? Right here. As long as these holds, I think you go higher on Pith. So that's one. CTSI, we talked about this. This had a nice pump since we last talked about this one. Actually, we didn't talk about it, but I think it was in your stream we looked at this, Rasadi, bro. But yeah, we looked at this and then he had a nice reaction off that zone. But hey, look, it's the trend is still to the downside. Nothing significant's happened yet. I'm just pointing out coins that have completed M shapes that are areas where you can manage your risk. Okay. CTSI is another one. Flip. Do you remember this one? Flip. I looked at this the other day. I was like, oh damn, we have very, very nice areas for Flip in terms of risk management again. I don't know if this coin is still alive in terms of a project, if they're still building or whatnot. But hey, in terms of technicals, you have hit a sharp, right? 1.618 extension right over here. You have got a sharp. And off the 1.618, you are holding it as support here. Right? So your last lower high is technically over here because this one didn't lead to a lower low, right? So your last lower high to lower low is over here. So if you wanted to build a position on this, you ladder in through this, right? Open again. Remember, guys, for those of you that weren't here last stream, haven't watched my videos, my laddering in strategy is always never enter full port. Okay. your CMP should have an allocation, whether it's 15, 20, 25%, whatever. Let's go with the 20, 40, 40 split for now. 20% as CMP, let's say, which leaves you 80% to DCA, right? That 80%, you're going to split into two. Okay, let's say 40, 40, just for the simplicity of the maths. 40% for deeper levels, right? And again, I wouldn't limit that, right? I'm a very dynamic trader. I'm not passive, I'm dynamic. I'm looking at the market, I'm waiting for confirmations to enter. I wouldn't limit it, meaning that 40%, if you get those lower levels, right? And you see buyers taking action, buyers actually taking control over the sellers at the areas you want to DCA at, then you spread that 40% there, right? If you don't, and you just go up from CMP, then the higher lows, right? The resistance is above, you flip to support, that is where you're allocating that 40%, okay? The remaining 40%, right, is strictly for when you go and take out the trend, right? The last lower high, and you put a higher low in, okay? Whenever that happens, you allocate that 40% in there. And this is to stop you guys from blowing your entire capital, yeah, blowing your entire load all at once. Okay, don't just one clip, right? Don't just do your entire port in one clip. Don't dump it all in one clip. This is teaching you how to actually swing. Swing trading isn't I'm just going to buy everything here and hold. You can do that if you're comfortable with it, right? But for me personally, I like to be more active in managing my port. So enter some CMP, you leave an allocation for when you're actually showing signs of bullish, showing signs of strength, right? Buyers are showing strength, whether it's flipping resistance to support or you're getting those deeper pullbacks to areas where you want to DCA at. And the final, you're always going to have an allocation left over for when the trend changes. Because obviously, you do not want to be fully allocated. It makes zero sense to be fully allocated before a coin is in an uptrend. Why are you fully buying something that's in a downtrend, sort of, right? And we saw this, right? So the call I made with fire, that one absolutely nuked, right? And I entered with 30% CMP, right? Didn't DCA, no buy strength, and that entire 30% is literally down 90% from average, right? So no DCAs have been done. It's what it is. That one was a lost 3K down the drain, right? Whatever. And that was just, me reading that was me reading the chart wrong, right? That was just me because if you guys remember on stream, I said on that fire chart, look, we have resistance, we're rejecting it. If you guys want to cut, you should probably cut. But like an idiot, I held for some reason, right? Obviously, everything was still very bullish back then. So I held thinking, yeah, maybe we get one more pullback and then we go up, and it just didn't happen, right? Next time I checked, we were down like 50%. I was like, oh, fuck. Well, might as well just hold this. It was only 3K, right? But that's why you don't want to be fully allocated, right? You don't want to be fully allocated before the trend shifts. Because imagine I'd gone in with my entire 10K allocation for that, right? That'd be entire 10K down the drain, right? Instead of just 3K, right? So you save that final allocation for when you get that flip, okay? And once you do that, you're fully allocated when you need to be, which is when you've confirmed a bottoming structure, you've confirmed a high low being put in after you've taken the last lower high out. Your average is now somewhere within this range, right? Your average is in the green still. And then from there, you can catch the bulk of the move. Swing trading isn't about, oh, look at me, I'm entering the bottom and selling the top. Okay, it's not about that. It's about extracting as much value as you possibly can while minimal risks to the capital you already own. That's what swing trading is about. Okay. It's not about, catching the bottoms and selling the tops. It's not about that with swing trading. Okay. If you try and do that, look, you're going to get liquidated before the coin even makes any sort of decisive moves. So that's how you would play this on flip. Okay. But yeah, let me go back to the chat. Hopefully that explained it a bit better. Yeah, for flip. Oh wait, is it for flip or is it? No, it was for that was for Pith, wasn't it? PYTH. Yeah. Yeah, but Pith is an area you can easily manage your risk for a swing trade. Very, very easily. Whether you do leverage swinging or you do spot, very, very easily works, okay? Over here. That's what I've seen. Yeah, for sure. Yeah, spot works too. When I say swing, I just mean you're buying with the intention to catch big upsides, right? You're not gonna sell at a 5% pump. You're buying with the thought you're gonna sell to big upsides. Which is why again I've not given pretty much any actually leverage like more intraday leverage course, right? I don't think now's the time for like intraday trading or something. Like I'm scalping, I don't really call scalps because I scalp on under 3 minutes, right? But on swings, that's what I'm doing. Some of the coins we saw from the video, like I've been talking about it for months, like Aptos, Injective, Sui, Say, these are the ones we've been building spot bags on, right? We've been talking about this like 6 months ago, right? Like build these. There were levels given back in January of this year for these coins, right? And they've all hit. They were just waiting for the price to move now. At these areas, it makes zero sense for you to be risking your capital on leverage, right? I'm not saying don't trade leverage. I'm saying don't trade leverage, but split your portfolio up so you know you have a swing portfolio and a leverage portfolio. That way, even if you go and blow up your leverage, at least your swings are untouched, right? You make it back at some point. If you go full in on leverage right now, it's just you you risk just getting chopped out, having very low capital before you actually get the proper move up. And last but not least, I was looking at H bar. Why was I even looking at this? I was looking at this because of this. Hang on, let me go into the monthly. And we have this, right? I saw this on H bar. This is a macro 886, i.e., this is a bat, right? This is a bat. Scott Carney tried and tested. And all we're doing is chopping around the bat, right? So on H bar, one person looking for is I'm interested in this very much once we get above 0.0736, basically. I look for some lower time frame structure to build, maybe see if any sort of bullish lower time frame structure builds. Then you can start building position here. But again, right, your main bag is going to be when this happens, right? When you flip that 886 into support. So H bar is another one. And on the meme side, I do not know if you looked at this last stream, so I'm just going to mention it anyway. On the meme side, we have ladies, which we talked about, right? Ladies is at an 886, right over here. This is a macro bat and a Gartley, right? So the Gartley, you're below the Gartley 786. You add the 886 off the bat. Let me do this one by one so it's not confusing. There. This is your bat, right? 0.5, 0.545 there, 0.22, 2.399 there, 0.88 here, right? That's your I've pinned it to the 0.5. I know it's like we went a bit lower, but I pinned it to the 0.5 because to me that's a liquidity rate, right? You go into any time frame like the weekly or something, you closed above the 0.5, and it was the 0.5 at the end of the day. That's regarded as resistance, right? So pin it to the 0.5. That to me is a bad. That's a 0.886. Right? You've got a bad building, very low risk areas to buy this meme if you wanted to. Basically, that's what I'm trying to say, right? So ladies is the first one, and the other one. And by the way, yeah, I built since we looked at this last stream. I've been building a position on this slowly. Right? It's not really moved, but I'm just slowly building a position on this at these lows. And another one is Myro, right? Myro, we had a bat. Again, we looked at this last week. We looked at it down when it was here. We're up very nicely since then, back to resistance, right? So we looked at this. When was my last stream? Let me just look at the date. My last stream was Tuesday. So the first, that's when we looked at this here. And I said, wait till you get a retest of the 87886. If that retest is successful, bit, right? The successful retest happened right over here. And from that successful retest, you are up 43% currently, right? At resistance, you flip this, I'll add some more, right? Look, above this, very, very easy to dictate. Look, you get above this, you're going back towards these ranges here, right? That's just your support and resistance speaking. Above that, obviously, again, the 0.5, so on and so forth. But Myra is another one, 886, SATA macro, SATA, especially down here, SATA areas, it's so easy to manage your risk. Like I said, if you guys were entered here, you'd have just caught if you lost the 886, right? Very, very simple. Very, very simple, straightforward. So yeah, Myro currently up on this. The flip of the red box, I'm going to add 2 position size. Right, bring my average up slightly to just catch the bulk of the move, like I said. You want to build your position, right? Don't worry about a 40% pump here. You want to build your position before you do this, right? This is nothing. This is a range where you build your position. This is the range where you distribute. Okay. What most people do, like even if they open a long here, they open a tiny long, they hold it because if they size up, their perfect entry is going to be ruined. Their P&L is not going to look as good, right? And then next time the average up is literally when you've already got all the way up here, and now you're like, oh damn, I could have made way more money. We look like we could go higher. The whole timeline is bullish, and the average up at the wrong time, right? Your average is now all the way here. You're going to get stopped out at some point, right? No point doing that. Build your position here, especially at the reaches of this, and after that, you can literally just sit back and relax. So Myra is the other one, right? But there's loads, right? For example, look, these are going to outperform, right? Think about how many harmonic setups I gave you guys, not just harmonic, but like with macro M shapes, right? How many setups I gave you guys. This was another one we talked live on stream as well, right? Myra, look, I said 5th of September before I went on vacation. I said, look, guys, 786. I'm building a position on this on Wojak. Wojak looks good, right? Your demand line is being held. You're holding the Garley 786, right? You had a reaction of it. So we went up 87% since then. And as of today, we are up 138%. Right? I'm going to trim a little bit off my spot bag once we get to C. And after that, just hold. Right? Very simple. And many coins are going to start doing this, especially after liquidity properly flows back into crypto. Right? So That's all about just managing a risk at areas that it makes sense to do so, right? It was very easy to manage a risk down here. Like I said, I've not updated I've not updated anything. Like Rio went up 2x, haven't updated it because these are gonna go much higher, right? These are gonna go much higher. I'll do just one mass update, and the spot gains on that month's gonna be like 4,000, 5,000% or something again at some point in the future once we go parabolic. So yeah, so that one is Wojak, but yeah, so many good ones. Another one I was looking at is DYDX. We talked about this already. Very low, easy to manage areas. And if you're talking risk management, very easy to manage, right? We have a shark, under the shark, a macro shark. We have loads of M shapes. And again, it's happening literally at the lows, right? Yes, the chart doesn't look bullish. I'm not telling you to go put your entire life savings into DYDX, but if you're talking about risk management, right? Look, you could literally do one entry. If you get below 0.804, right? You close below that, just cut. There's no point holding, you made a fresh low, right? Just cut. Very easy to. But this is where you take the risks. There's so many projects just like this, right? Literally just like this. But the other one I was looking at is, let me see, where is it? Not Magic. I mean, Magic was one. Deep back at range lows again, but big time. There we go. Looking at this. I've just been patiently waiting, right? I want a very clean flip of this 886 2.618 area back into support for big time. When that happens, I will be entering this. Okay. I'm not going to enter this yet just because below this level I'm not really interested, right? But above this level, well, I mean, first and foremost, you have this, right? Above this level, you have the B of this harmonic somewhere around here, right? And then you also have obviously the C to A. So, the upside targets for big time are pretty good, right? As long as you get above this. You don't get above this, there's no point really holding this. So just waiting, say a loss or something for this area, and just see when you get that breakout retest, right? That is when you start bidding on big time, because then it could go back higher again. But yeah, guys, I've already gone over the other coins like so many times, right? The last few streams. So, you can just go back and check those. Toshi, like going huge off this. We were talking about this again. We were saying, look, like this 4-month buyer zone holds back in September. Right? Looking at this from the 9th, we're saying as long as this 4-month holds, we're going to go higher. We're looking at this literally at the 9th, and we're up to an 83% on this, right? You're just holding these. I've not got much allocated into these. I'm not going to overtrade memes, okay? But little amounts can correlate to a lot once you hit peak stride. So there's these. So do you guys have any coins that you want charted, right? Say T1 hit. There you go. T1 hit on say. Sui, our spot bag has gone insane, right? Sui's literally, the only thing it hasn't done is taken out A, right? If you look at the daily, you took out your, let me make these invisible one sec. There you go, there you go. You've taken out your T1, right? You've taken out your T2, flipped to the support. You're literally going to A now. You've not taken A. I'm expecting a rate of this. Once this rates, if we do get some sort of weakness, I will look for a quick head short back down, right? Because I don't know if they're just going to give you, yeah, let's just send it. I don't know if it's going to happen. We'll see. But for now, Sui's basically at full TPs, right? The harmonic framework is, okay, A's been hit, you take profits. If you literally didn't take any profits on this way up, and this is definitely where you consider taking some profits. Okay. And then after that, new targets again, right? Again, you can look at your diagonals for future targets and stuff, but you're gonna go higher, $3, $4, whatever, right? The targets are there on Sui for breakout. So yeah, Vanry literally still at the key. It's come back to our key area, right? It's literally come back. So if you missed that initial entry, where we took the entry and then we went up like 38, 40%, right? 41%. If you missed that entry, you're literally getting the same entry again. Very easy to manage risk. Right? For example, you get below this D, this point here, right? You don't want to be holding this. Right below 0.0675, you don't want to be holding this, right? You've got support and resistance levels on the way down. Right? But again, very easy, especially for spot on these coins or swing leverage trades, right? Very easy to manage your risk on these coins. Right? Aptos, another one. Look, we're talking about this. Aptos is something I've been bidding literally since these, right? Because if you go back to January, scroll up on my channel, these are levels I gave way in advance in Aptos. We said higher time frame, buyers, monthly demand zone, 6 month buyer zone, so on and so forth down here. It's on my channel. So Aptos from average right now, which is literally around here, the average is up. What is it? 68%, right, on spot. And nowhere near, I'm not selling here, bro. I'm selling, once we get towards the highs, that's when I'll distribute. Otherwise, I'm just holding, right? I did a bit of addition when this happened. And again, this was something we looked at on stream, right? Breakout of the neckline. We said, look, inverse head and shoulder structure, breakout of the neckline, retest of the neckline. That's where he gets in. That's yielded a nice move up. The measured move of the neckline is still 44%. It's still like halfway, not done. Right? You still got legs, basically. So Aptos looks amazing. Right, so now it's just literally just a matter of patience. So again, just to update on some of my positions. Do you guys have any coins you're wanting charted? That is the question. So put it in chat. Uni. Okay, let's take a look at Uni. Uni is, I believe, already in my. Oh, for Uni, I have this macro bat 511 886 2.618, basically, right? You've completed the M shape, and let me turn these here. So this is your 4 month buy zone. This is your 4 month seller zone. You've completed the M shape, and you're trying to flip your 4 month seller zone into support. Okay, this is very, very significant. If I go into the 12 month ones, one second, let me turn everything invisible regarding the fibs. There we go. Have I got this drawn? Okay, on the yearly, this was your seller zone. Above 7.222, Uni's going to teleport up. Okay, you're literally using last year's seller zone low as resistance right now. You can see that area where sellers took control back from the buyers. 7.222, that is what you're under right now, right? That's what you're using as resistance. So you flip this, that is an area where you can manage your risk on for Uni. For example, even just this zone, if you just take this zone into account, between the 4 month and the 12 month discrepancy, you can see it's very significant in terms of support and resistance, right? So you flip this zone here, you could, if you're looking for a leverage trade, you're saying as soon as you get below this zone, right? As soon as you get below this, as soon as you get below 7.038, you'll cut. That's what you're saying, right? Your risk, if you want to leverage trade, your risk is actually really easy to manage here. But Uni definitely looks really, really good, right? No question about it. You've got your macro M shape, and as soon as you claim 7.222 into support, this is going to melt up, in my opinion. This is going to start melting up, and you're probably going to go to $8.26 super fast. You're going to get some lower time frame chop around 7.74 and such, but you're going to go towards this. That's going to be a target, right? 9.53 to 9.29. Get above that, flip your B, then 12, 13, and 17. You don't have much up here in terms of resistance. But again, if we go on to the 4 hours ones, see we're below that level for now, right? What you could do is you could open, if you think about leverage trade, you could open a small position here, right? Maybe 30%, 40% or something of your allocation you'd have. And then if you flip this, you could size up, right? With that allocation and then run it up. And if you get below, just cut it. That's something you could do. You're risking from current price, that's 1.51%, right? So don't obviously position like a DGen. I'm not going to say don't leverage like a DGen, don't position like a DGen, because it's not by leverage, it's by position size. So maybe 30 to 40% CMP, and if you flip, add, otherwise don't add. And just let that go down if you wanted to try and take a trade on this. Because above this, you have legs, you're going to go much higher above this particular level. So Uni definitely looks very, very good, bro. Sadly. Okay, not Tia. So yeah, we'll go and look at that. Super Dusk, sure. So let's take a look next at one sec. I believe it was not. So not is something else. I've already given not right over here. What do we have? We have again, this is not a formal harmonic because I've not taken it to this week. Okay. Uh, the reason I've put my harmonics like this right now is because if you look at this wick, what this wick was, you put it on exchange, you went to a certain price, and then after that, you had a massive dump back down, right? So this was just your literally like, listing volatility. I don't consider that to be like true price action. What you got after that is then what followed, true price action, right? That's just the reason I've not taken this wick. what you have here or not, again, do I put my seller zones down? No, so let me put that down, right? Let me create this as a group first. One sec, rectangle, rectangle, horizontal line, 1, 2, yeah, 3, 4. Perfect. Okay, so this is going to be in a group. Hide it. And then we're going to be looking at this. Firstly, 6 months. Here is your 6-month seller zone. And what does that mean? It just means current cycle. On the 6 months, look what happened, right? Again, my thesis, why I started using the system for myself, right? I was just sat there. Um, And I was thinking, how can I further, how can I get support resistance in different ways? One way is to try and get support resistance based off price action, right? So for me, how do I read price action? For me, reading price action is solely the interaction between buyers and sellers, right? What's happening in terms of buyers, what's happening in terms of sellers, what kind of structure is being put in because of the interaction between buyers and sellers, because of the discrepancy between the supply and the demand, right? So what is this? That's how I came up with the system. What is this? It's a 6-month candle where obviously buyers were in control. How do you know buyers were originally in control? It's a green candle, right? On the 6 months, it's a huge green candle. Price opened down here. Buyers took the price all the way up to 0.037, right? So from here to here is an area, obviously, where buyers were in control at one point, right? But what happened once this level was hit for whatever reason, right? Sellers took control back from the buyers, right? All of a sudden, supply was much greater than demand, right? And the price came back all the way to 0.014570. 14570, right? So this is the area where the sellers took control back from the buyers, right? So that is my system. That is what I call a seller zone, right? So this becomes your current cycle because obviously this is very new. Current cycle, 6-month seller zone mid. And the reason I'm not calling it a supply zone is because that's completely different. Right? That is a well-known, well-established, widely recognized liquidity pocket, right? A concept of liquidity that's widely recognized. Many people use it. The only people using this are my students, right, who I teach it to. But this is still I found this to be a very, very nice way to get support resistances in a manner that matter, right? Your key support resistance levels. So that's how I've got support resistance. I won't have to change for a year, more than a year, right? The previous cycle one is from 2021, right? And it's still been respected today because it takes price action into account, not just where the peaks are right now, No mid, sorry. That is the text feature on this is so funky, I swear to God. Bro, 1 second, let me delete that and do it again. But here is your seller zone mid. So basically what you're saying is these three are support resistance levels, okay? So current cycle, 6-month seller zone low. Current cycle, 6-month seller zone mid. And last but not least, this is current cycle all-time high, right? On the higher time frame, these are now three significant SR levels. Okay, you're saying if you want not to make new all-time highs, three things need to be done. What's the first one? You need to reclaim the 1 as support, the range low. Then you need to go and you need to reclaim the 0.5 as support. Then you need to go and you need to reclaim the 0 as support. Okay. If you go and you see weakness at the 0.5, you take a hedge because you're saying you're seeing weakness at an area where sellers have already established they're willing to, take control, right? So that's just like, okay, well, sellers are literally taking control at an area where they have previously taken control. I'm going to take a hedge if there's weakness in the sale. I hedge short. You flip, you take a long. Very simple. You've got three key SRs, right? And then you see this. So when you eventually went back here on the daily, right? Move down. And you can do this down the time frame, 6 months, right? 4 months is probably going to give you a different level, right? So this is your 4 months. So let me just do that again. On your triannual, you have this, right? So again, this is current cycle 4-month seller zone low, right? Then you have your current cycle 4-month seller zone mid. And then last but not least, you have this is still your current cycle all time high. Your high stays the same, right? And then you can do the same on the 3 months, right? Actually, 3 months is the same as the 6 months. What about the 2 months? Probably same as the 4 months, or same as this monthly. So monthly slightly different. I'm going to put the monthly down as well, right? Here to here. Let me turn these two off once so you guys don't get confused. So this is your current cycle monthly seller zone low. This is your current cycle monthly seller zone mid, and this is your obviously current cycle all time, right? So that's that on the monthly. Now you've got across the three different time frames, you've got key levels that are going to act as support and resistance, right? And if you wanted to, you could do this on the weekly to really finish it off, right? But you don't need to, because now you see, as soon as you went to that area, what do you notice? You notice weakness, right? And again, just for the sake of it, let me just do this on the weekly, and I'm just going to color this a different color so I don't have to type it out. But let's color it black. That's down the weekly. You have now all the levels you could possibly want as support and resistance in your chart, right? So then when you see something like this, you see price going back up, and more importantly, you see massive SFPs at the area that's been regarded as the mid, right? You take a hedge, right? So if you wanted to hedge a short, you would do so literally based on this right there. Right, as soon as this closed below, you could have taken a hedge based on this. Your stops is going to be above. You're going to DCA. That is a wide range. Okay, 31%. You're going to DCA, or you're going to have entered on a lower time frame. I'm just trying to give you guys an example of how you would do this. Your DCA is going to be the top half of this, right? Or rather, what do you have here now, right? And this again, you have a buyer control candle, an area by sellers to control back from the buyers, right? And let me color that in bright red. So when you again you have a seller zone and you see weakness coming in at the mid, right? And now daily 1 hour to 4 hour price action, time frame alignment, you see weakness coming in at the mid. As soon as you see structure like this, right? Huge sell and what was once resistance on the lower time frame, right? Being flipped back into resistance again, like this, you have amazing area to now manage your risk even further. And you could have actually taken this short, where your risk is only 3.75% now, right? And this is what I mean when I say I'm an active trader. I'm not setting limits. I'm not doing none of that. I'm not going to set limits for this or this. I'm going to wait. I'm going to analyze buyers versus sellers once I see a clean distribution, or rather a clean distribution of data where it tells me, look, we've hit key areas, a seller zone, we've shown rejection, right? We've come back, we've tried to get back above, but then even the local time scale resistances that we broke out of couldn't be maintained as support. We treat it as resistance again. That tells me we're going to go lower. I'm going to take a short based on that price action, right? And from there, risk to reward of 3 for your initial TPs, right? Risk to reward of 3, put your stop loss to break even, and after that, literally, look, you lose these levels, your next main support is at the 6-month low, right? You At this point, you can set a limit if you want, and you would have had the limit filled eventually, right? You get more lower highs like this over time, right? You get this and this, you can literally size up on your short, risk free, because you're already in the green. So let's say you size up here, your average is going to drop from down there to here, right? You can size up and still put your stop loss break even because you're already in the green. And then eventually your limits hit, right? And if you lose that level, again, next level, so on and so forth, right? That's all it is. But now what you're doing, look, even recently, what did you do? You went and reconfirmed that area to be resistance, right? So for not, now, if we're speaking in terms of what level do you need to get above before you can get higher, 4-month seller zone low, right? Ideally, you want to be above that level, right? You're above your weekly, right, which is great. You're above your weekly, you're above your daily as well, right? You had a daily seller zone here. Let me see if you're above the daily ones. Yeah, you're above your daily, right? Your daily seller zone right over there. And I'm just gonna, just so you guys don't get confused, color it like yellow or something, right? There you go. But you're at an area now where, okay, you're at the lows of your seller zones, right? Building a position here. For a swing, you can build a position here. You get below this. If you get below 0.006890, you just cut, okay? From where you currently are, that is a risk of around 12%. That is nothing for a swing, okay? Got to understand that is nothing. 11.41% risk is nothing for a swing, because you can literally either go, like 40% of CNP and leave the rest for DCAs, or if you give yourself some DCA room, if you ever get a rate at this level, you could DCA that, okay? But you can, like I said, the ladder rigging strategy I mentioned earlier, you can still apply that, okay? And then work your way back up, because now you're above the levels you're starting to be above, right? And if you get back above the one here, the 4-month sellers are low, you'd add some size, right? Your target would be here, you flip that, add some more size before you go really parabolic at this stage to get to this, right? Because there's not much resistance in the way for you. So here's not, right? For not, you can literally here. And this doesn't mean enter everything full port. This just means This is where you can look to enter CMP. If you decide to go 100%, that's on you, right? I'm just saying it's an area where you can manage your risk. Even to conservative targets, 5.88, 3.23, right? So reward wise, it's more than worth it, right? But again, if we're talking harmonics now, if you turn the harmonics back on, group one here, we're saying, okay, the godly things here and your C's over here. So even if we just go to C, they're conservative, right? Very conservative, 8.64 RR, right? And if, especially if you leave room for DCA, should we get one more push lower, right? You'll have even better entry. So your risk to reward is going to be even better. And again, you can set limits for just below this if you want, right? Or you manually wait to see to be close below, right? If you don't want to be wicked out, that's on you. I'm not going to tell you whether you should set hard stops or soft stops. For swings, I typically set soft stops. I'm closing manually, but you don't have to follow my footsteps if you don't want to take that risk, right? That's completely on you guys. But not at an area where you could easily manage risk. Below this area, you just don't want to hold it because you probably look for re-entries around 0.055 sort of area, right? Look for re-entries around there. Maybe, you had a seller zone over here. Maybe you're going to go and retest that at some point if it drop lower. You watch the price action around here and look for new entries, right? You look for new entries down here. No point holding through it unless you're actually willing to take that risk, right? 30% risk, which when you have such a clean area to invalidate, I just wouldn't take that risk myself. So yeah, not very, very easy to manage your risk around over here. So that was not TIA next. So let's look at TIA next. Where's TIA? I do have TIA somewhere in this list. We were looking at TIA at the lows, bro. Yeah, look, we literally looked at TIA over here, 76% off. We have so many coins that did 80, 76%. We looked at it last stream, and I just haven't updated in my channel. That's all, right? So it looks like I've been really inactive for the month. I just gave all my calls in a YouTube video. That's it. But there you go. On TIA, what you're doing is, let me redo this now. I'm going to redo price range. No, hide that rectangle. Yeah, delete that. I'll keep that for now. Like this. Okay. So TIA has put in a higher low at your 4-month buy zone. Again, on the triannual close, on the last triannual close, what do you have? You have a candle where obviously sellers are active, right? That much is very, very obvious. But even though this is a candle where sellers were active, over here you have an area where buyers took control back from the sellers, right? So this is the opposite of a seller zone. This is a buyer zone. Oh, 4-month buyer zone. You broke out and retested that 4-month buyer zone right here. Okay, you might get one more deep retest. Who knows? Maybe if you're lucky enough, you might get that deep retest. If not, you're just gonna go higher from here, right? Guys, one sec. Someone's at my door. Give me literally 1 minute. Let me just see who it is. Sorry. can you guys still hear me? Sorry about that. Right, let's carry on then. We're looking at TIA. So 4 month buy zone, right? On TIA, area where buyers were active on the 4 months, over the 4 months. We've rated it. So that raid happened when this happened, but then we recaptured it, right? And this is where we were looking at TIA ourselves. We're like, look, we literally getting the recapture, right? And this is why we're up. We were up, 76% from the area. We looked at the recapture for entry. You've also come and you've regarded the top of that as support again, right? 4.488, that general area. It might not be perfectly to the wick, but you're not looking for that perfect wick tap. You're looking for that. What you're saying here is you're saying there was so much demand, buyers didn't let you come down to the 4.488, right? That's bullish. So now you're going up, you're trying to, looking like you're trying to point out that lower high, and you might come down lower, who knows? But locally speaking, and actually not even locally, macro wise, TIA is not an area where it's putting in a potential bottoming structure, right? Your last lower high that led to a new lower low has been taken out. There you go. Right, that's been taken out. And again, why is that significant? Because that's how you look for trend shifts, right? For those of you that are unaware, let's say you're in an uptrend. How do you know when you've got out the uptrend, right? Is when you go take out that last low and then you're looking for that lower high. Right? That's how you know you switch to the downtrend. And similarly, if you're in a downtrend, how do you identify, okay, have we switched structure or not? Well, you're looking for the last low that led to your lower high, right? You're looking for that to get rated. And you can either carry on, put it on the high low, whatever, or you can come back, retest that, or you can just come back, have a deeper pullback, but at least put a higher low in, right? Put a high low in now, because now you confirmed a low, high, and a high low. That's your first semblance of a trend shift, right? So on TIA, what do we have? Low, high, sorry, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? So this high has gone and taken out the last trend leg that gave you your low and your lower high, right? So now you're looking for a higher low, and technically the higher low is already there, right? So on the weekly, you now have this seller controlled candle where you can see where I'm going with this. This is your weekly buyer zone, right? Blue. And let me go on to settings and don't extend the lines left. Don't extend them to the right either. We'll do it manually. There we go. Right. So for this week, this is the levels you're working with. You're currently below the open, right? So you're currently below the 530. So your two support and resistance levels are 4.909 and then 4.51. Right. So basically, if you lose 4.909, you're going to go down towards 4.91. You might just retest that one again. Right. So if you're looking for entries on this right now, I wouldn't enter CMP, right? You wait to see, do you get a daily flip of 5.30? Your first entry is either at the daily flip of this, or you wait to see, okay, you know what, do we get back down towards 4.909, anything like that, right? If buyers are defending this area, you get the retest. For example, that's a breakout. If you get the retest of 4.909 and you close above on the daily, now that is an area you can manage your risk around to try and take a leverage long. I wouldn't do so at the exact area where we are. Okay, so either wait for this to happen, that's where you'd enter, or you wait for this. And you wouldn't limit this area again. I'd wait for price action to tell me buys are active, right? So again, if you're looking at daily price action, it's 1 hour to 4 hour entry models. So on the 1 hour, you'd be looking to see, do we get down here and is the retest successful? If you're looking to scalp this, drop it to 3 minutes. But if you're looking for an intraday trade, just an entry model you can build on over time, 1 hour is good enough. If you get 1 hour to 4 hour closes above, let's say you get 1 hour, first 1 hour candle is a successful close, allocate some position. Maybe you open 20%, right? Then look to see, does the 2 hour close above? If the 2 hour also closes above, allocate another 10 or 20%. If the 4 hour closes above, allocate another 20, 30%, right? And that way, over time, you're spreading your bids. And that way, if 1 hour is successful, but then the 2 hour closes below, you can immediately cut your position. That way, you're reducing the risk to yourself as well, right? So again, when I say I'm an active trader, this is what I mean. I've got loads of strategies where it involves me being active, not just setting limits and being docile, but actually being active, reading the price action continuously, right? I prefer this way. It's more work, but I prefer it this way. But these are your two key levels for now. On the lower time frame, these are more two key levels. On the macro, you don't have to worry. On the macro, if you took the original call, you're still up. From here, if you ever revisit these areas, that's just where I bid again, because it's going to be really easy for you to manage your risk around these lows. But on TIA, right now, 5.309 flip or a 4.909 retest. That's what I'd be eyeing. If you lose 4.909, 4.51, that'd be your next area. And if you lose that, well, you already have your 4 month levels already on the screen. right? So all just support and resistance levels. So let me delete the brush, delete, and brush to brush, delete that as well. Did that make sense to whoever asked for Tia? Who asked for Tia? Don, if you're still in the stream. No, I don't think Don is still in the stream. Okay. Soul, the Soul, Super, and Dusk. Um, yeah, I'm building a position on DYDX matter. I'm building a swing long. Yeah. Um, yeah, I'm just literally slowly adding over time, right? And another thing is, I have, I probably have a bigger port compared to obviously like the average person, so I can take time in building my positions, right? Because I can absorb, because I go across, I can absorb the slight drawdowns. If you don't have the biggest port, size accordingly, okay? Size accordingly. Okay, let's see. So we have Sol. We'll look at Sol, Super, and Dusk. Let's do Super and Dusk first, and then we can look at Sol because Sol's going to be a bit bigger. Super and Dusk will be quicker. I do not know if I've done Super USDT. Yes, I have. Never mind. Super is under harmonics completed. You have, again, look, a Gartley. This is something actually we looked at and I said, when we were looking at this, like this already moved. Right? We were looking at this already moved. I learned this one really, really late. So I said, the one entry you're gonna have is if you flip the order block mid into support. You did that here, right? So that was the last entry I gave on Super. I'm not in this myself, because this already moved too much for my liking. I'm not in this one myself, but you've had two really nice entries. The first one being the flip of the mid, the second one being the flip of the top of that weekly order block. What was once resistance is now support. You do not have an entry on Super. I recommend, you know what, take your effort somewhere else for now. Because you are at resistance, you've had a huge move up on Super already. Um, there's no point risking it here when there's many alts you can manage your risk way easier around, right? But if you did 110 entry, your next entry is going to come if you basically go and flip this zone, right? So I have this zone from this wick to the C. You go and flip this, you go higher, right? This is literally just me looking at price action. Resistance, 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 back into resistance here. You flip that C into support, you flip this zone into support, you can target the A. After that, you can target these highs, right? So literally no entries on this for now until you either get this, right? Or you get some sort of more substantial pullback back towards these levels. If you do get that, then yeah, you can look for your entry there. You didn't even get like a proper good type two, right? You got a higher low. I don't know, you got a higher low. That was your type two. There you go. But yeah, super. I would recommend put your effort somewhere else, bro. For because super, it's already moved up. It's moved up a little bit already. So put your effort somewhere else. But that's super. Um, Dusk is another one that should be there. Dusk, very, very beautiful. Over here, you have a Gartley on top, and at the deeper down, you have a bat, right? So Dusk, another one of those ones that's trending up over time. I did open this long here originally, but I kind of closed it over here because I'm in way too many positions. I was in like 40 positions at one point, like a couple of weeks ago. I was going on vacation. I was like, you know what? I cannot sustain this, right? I'd rather have, I'd rather like clear some and just rotate, free that capital up for like any entries you might get again. So yeah, I got rid of my dust long, but yeah, I did catch that long from down here when we originally talked about it over here, right? That flip to up here. It wasn't much at all, but still like a couple thousand profit, not much. So Dusk, around above this Godly 76, you have all the reason in the world to be holding this. Above this, obviously, above a key level, you can see that. Not just the fact it's a harmonic, it's the fact that it's a key level, right? Resistance, not resistance, support and resistance throughout time. So from here, if as long as you're above this, you can build your risk around this area. If you're below this, you might just get one more tap towards that liquidity pocket, right? Maybe raid some, do this, who knows? But if you stay above this and get a retap, I'd enter around that. If you're below this, I'll just hold until you either get higher or you get those deeper. So entries around 2039. If you need to pivot around 2039. If you flip 2039 to support, enter. Otherwise, you might get a deeper pullback into this zone here, where you might get a better entry if you're looking for dusk. That's dusk. So we looked at uni, we looked at dusk, Tia. No, so let's look at Sol next. Sol I've not looked at for a couple of days. So Solana, again, we're thinking about this in terms of previous cycle and this cycle seller zones. Let me make it easier for you guys. Let's look at previous cycle seller zones first. Okay. Previous cycle, firstly, 12-month seller zone. What does that mean? Go on to the 12 months. Exact same concept as we were just using, right? We have a low. Let me get rid of these. One sec. Oh, 2 month. On the yearly, we have this candle, which is clearly a candle where buyers are in control, right? We have a candle where buyers are in control. And then from there, we have an area where sellers took control back from the buyers. That's your seller zone on the yearly. You're saying if you want sold to make new highs, flip these three levels into support. If we see weakness there, you take a short, right? So that's on the 12 months. After that, we have this on the monthly. Why have I not got 3 month levels? One sec. 6 months is fine. 4 months is fine. Oh, it's because they're all the same. Yeah, they're all the same. Okay, so we have 2 month levels next. On the 2 months, this is your seller zone, right? The levels are marked as 2 months. Your low is over here. On the 2 months, your low is over here, right? No areas above here, right? That's where you have no candle body closes. This is your seller zone. 2 month seller zone low is over here. Your 2 month seller zone mid is over here, and then your obviously your all-time high stays the same. And last but not least, your monthly, your low is over here, your mid is over here, and all-time high stays the same, right? So three key areas there. So you're not surprised then that this bull market, where did we go to top out, right? You went back to that cluster you had, right? And as soon as you see weaknesses like this, you can build shorts, right? You're saying you're getting weakness. Again, as an area, you're front running your 12-month in this case, right? You're front running your 12-month mid in this case. You're saying there's so much supply, sellers aren't even letting you go to test that 12-month seller zone mid because that monthly and the 2 months, they're literally nuking you off that, right? You went down, came up, and this time around, what did you do here? You created a new daily seller zone in the process. You filled it, you closed it, right? So again, you had a very, very nice short you could have taken. This is on the daily, right? You could have much better risk to reward if you entered on the lower time frame. But risk to reward of 3, take some profits, right? And then we just move your stops to break even, right? But these are the levels that eventually Sol's going to get to, and it's going to need to sustain flips off, right? You're going to need to go up there at some point and flip these into supports, not have them as resistance, okay? We need to flip, first and foremost, 169.94. We need to get above that and flip it into support. So that's the previous cycle. And now current cycle, we have this. So again, let's do this bit by bit because we have more. First and foremost, on the yearly, what do we have? Previous year, we went up, and this was where the sellers took control, right? So this is your previous month seller zone low, mid, previous year, sorry, seller zone low, mid, and high. So we got to break out this year. We might read this in the future at some point, right? Then we have this on the 6 months. If you take a look, we have this candle where sellers are obviously not in control, buyers are in control, but then sellers took control back from the buyers at this area, right? Between 209 and 146, basically. So on the 6 months, that's your seller zone low, mid, and high. You have support and resistances right in front of you now, right? Look, that 12-year level that was created, you broke out of it on the 6 months. And this 6 months so far, what have you done? You've retested it. You've confirmed the mid and higher to be support, right? That is bullish. Now, if you can get above the 6 month low, you're saying your soul's going to run towards 209 again, right? That is what you're getting at. Stop at 178 and then go towards 209. If you look at the daily, there has been the retest, right? That deep retest you got there and the reconfirmation of the top as supports again, right? So now, right now, there's no long to be had on Sol if you're not already in a position, right? Our average is $70 way back from January, right? Our average is 70. The last bid we did, rather, not average, the last bid we did at $70. My average is like $40 or something right now for Sol on my spot. Over here, flip this, then you have a reason to enter along, right? As long as you're below the 6 month seller zone low, you're below previous candle body close, there's no point in you longing, okay? Because there's no signs of bullishness yet based around previous seller zone close. So that's just the 6 month and the 12 month, right? So we have now the 4 months as well. If you go into the 4 months, there's your 4 month seller zone, right? So let me just zoom in so you don't get confused. I'm just giving you higher time frame levels, right? 4 months, and last but not least, we also have the 3 months right there. Okay. So these are all going to act in the future as support and resistance, right? You can see where did we reject from? Literally wick perfectly to the 3-month seller zone low, right? Previous quarter over here, the previous quarter close, right? That is where we wick to, confirmed the loss, and you close below the 6-month seller zone low in doing so. Right. So below this level, you have no interest in SOL. Okay. You either have to wait for a pullback back towards these areas, right? Once again, maybe even deeper, somewhere around here. You either wait for that pullback or you wait for this. Okay. You don't mark it long here. You're literally below resistance. Right. You can see that. Wait for the flip, you go higher. Very easy on SOL. And once you do get that flip, and remember, ultimately, your goal is, right? That's why I've labeled this. Your goal is ultimately to get above this 12-month seller zone. Once you get above 169, you can ignore these, right? Don't ignore them if you're leverage trading, but for spot trading, you ignore that. Your goal is to get back towards all-time high, right? So right now, the line in the sand is we need to get above 169.9 because Solana has a lot of work to do. It needs to reclaim this, needs to reclaim this. A lot of resistance there you can see. I don't know if you do it first time. Once you confirm 169.94 to be support, then you have legs to then seriously run, right? 214, and then you've got 235, 261, and from there, well, fresh all-time highs. That's Solana. Okay, no entries where you currently are. Okay, none. You're below resistance. You need to flip this zone here between 146.39 and 152.57. That needs to be flipped. So that is SOL. And okay, I'll look at one from what Concludes put down: TIA, Inch, HNT, ARC, JTO, and Fed. Let's look at Injective and ARC. Let's look at those two. And after that, I'll call it a day, guys. My headphones are nearly run out. I'll speed run this. Injective. Right over here on Injective, again, what do we have? We do have a godly, right? It's a 761. It's not a 786, but it's a 618. And yeah, this is informal, okay? Don't take this with this is just the informal M shape we have over here. But the most important thing is, let me get rid of these now. Actually, let's go on to the daily first. This and this. This is what we're using as support. I'll leave that on. Should actually no, let's turn those off for now. So Injective. I honestly, like, if we were to get one more dump across the markets, like, I really hope we get into $9. I don't know if it happens, right? That's $10 off from where we are currently. This would be an amazing buy if we got it again. My initial inch buys were literally $1 like 40, guys, right? I got this into January of 2023, but no one was in the markets. So I would really love to load up on this again down at these lows. But right now, what you're doing again, 12 months, seller zone, right? You above the mid of the seller zone. The retest so far of the mid is successful. You're not above 25, sure, but you're above 16. That's what matters, right? That's what's important. There. Seller zone, right? It's the area where sellers were in control. You broke out of it, you've retested it, you have 3 months to close. It's looking like it's going to be a successful close, right? Literally 9 months has already closed above. So maybe you get one more tap of the 0.5 at $16, who knows, right? If you do, great, just another opportunity to add. But you're above the mid on the yearly, which is important because if you close above the mid, then you only have this to contend with, right? You flip this, you're going to make, you're going to go back towards $53. And hopefully at peak bull market, triple digits, right? $100 plus for inch. But on the macro timescale, you're rejecting off of that 618, right? And that 618 is off from the low to the high, right, of the cycle. So you're below the 618 of the Gartley, obviously. Below this, I wouldn't really advise entering along right now. And that is because obviously the trend, you've shifted the trend, there's no confirmation of a higher low yet, right? So the first thing now we're going to look at is, again, that is a weekly buy zone, okay, right there. Red candle, and in this candle, we have an area where buys were active, right? So this is the area where buys were active to control back from the sellers. You want to see Inge showing strength in this area by the time this week closes. If it closes below this zone, you've lost all hope of this particular buy zone being support, and you risk turning this into resistance in the future, right? If you ever do that, then I think you actually go lower, make new lows on Inge. Okay, so if you want a higher low, pretty much do it here, right? And your last line in sign again is 16.78, right? You do not want to be closing below that on the higher time frame. Okay, so now this level here, right? I believe if I go on to the 6 months, yeah, there you go. On the 6 months, what you have here is again a huge sell candle, right? But now this is the area in the last 6-month close. This is where buyers took control. This is showing you the area where buyers took control back from the sellers, which is why I marked it out. So as long as you're not losing this area, you're saying you've once again treated the area where buyers were showing strength as support. So with that being said, right, my line in the sand, if you wanted to enter Inge right now, I'd enter CMP. My DCA would be at this zone between $18 and $16, basically, right? And I do all of this with reduced size for now because the last lower high was taken out that made a fresh low in terms of closes, right? But the high low hasn't been put in yet, right? Because if you lose these two levels, you're saying you're below the yearly seller zone and you're also below the 6 month buyer zone, right? All both higher time frame levels where buyers and sellers were showing confluence, you're below all of that. You're treating as resistance, you're probably going to go much lower. So if you can be patient, you might just get the $18 to $16 inch range, right? And as long as you close above this, especially close above the midway point, you're probably going to bottom out here and then slowly start going up again, right? Curling around. That'd be a nice area for a higher low as well. If you don't bottom out here, then I'd basically look for $13 to $12 again. If you lose that, that's when you get the $9 to $5 inch. Right? We have a very nice macro bat that would take place should we get that level. Shark slash bat, right? A shark, let's say for now. But you have a very nice area down there. Should we lose the level and get there? So for inch, basically between 18.59 and 16.79. That's the area, that's the zone where you're watching to see do buyers take control, right? If you get there, do buyers take control? On the lower time frame, you need to lose this. Let me actually use fibs for that. On the lower time frame, you need to lose 19.65, right? Literally what you're fighting against right now. If you go to the daily, you need to lose this because that's the weekly buy zone from last week. You need to lose 19.65. If you do that, you get your box. You get the 18.54. You get this. So, maybe look on the hourly to see, do we lose this or not? If you lose it, you might be able to catch a really nice head short if we get the breakdown retest down to this area. So that's inch. And last but not least, guys, I will look at, what was the other one I said I'd look at? I will look at, one sec. Inch and ARB, right? I will look at ARB and I'll call it a day there. Arbitrum, because my headphones are running out of battery. Probably going to die anytime soon. ARB USD. There we go. Arbitrum, look, it's literally still at the area of the shark. You're still at your lows. Nothing's changed, right? You've taken out your last lower high. That gave you your lower low. You're looking to put in a higher low. This is a very, very nice area to put in said higher low, right there. So if you put your higher low in over here, that's literally not even if that's what you're looking for. You're looking to see if your higher lows get put in. I don't know if you get one flush of this, right? You might just do this, flush out some longs and do something like that. You might just do that, or you might literally just do this. Doesn't know. But anyway, this is where you should, again, no position sizing everything in one clip. You don't want to be chopped out at the lows just for this to run. But ARB is something else I am accumulating just because of look where it is. Right? Look where it is. It's so easy to manage your risk at this area. You're literally saying, look, should you lose this buyer zone, basically, right? Should you lose this buyer zone here on the weekly, you no longer need to hold up. So currently you're below the one, right, of that buyer zone. That's literally what you're using as resistance as we speak. If you use that as resistance, obviously you have the mid of this PRZ. You might just go down to the 0.5 again. And it's very, very simple. If you close below this, you cut. No entries below this. So if you were to enter CMP, I would just literally just leave this range for your DCA, right? Leave this range for your DCA. And you leave a range for when you go back above and reclaim this area again. You'll be fully positioned by the time that happens, right? Basically a trend shift. And then after that, you can just ride this, extract as much value as possible. Remember, that's the goal. Very high targets for this. Even if you go back over here, right? Conservatively, even back over there. Super, super high targets on our relative to where we currently are, right? So that is Arbitrum. Just look up where you are. You need I say more? Just go on the weekly and zoom out. Look where you are. Need I say more? Right if you look at this on the weekly, you realize how futile it is worrying about lower time frame at this area. Look at the monthly. You're building at the lows, right? You're building at the lows. You completed a shot. If this holds, you're gonna go up. It's very, very simple. You're gonna go up. So there's no point worrying about lower time frame chop here, right? Just position for the higher time frame, and you'll be fine. So that was all. Hmm. Uh, Yeah, Arbitrum, amazing, brother. It will play out at some point, right? You just need liquidity to flow. And right now, it's only select holes start popping off. But yeah, that's that. Already went over say earlier on the stream, Asni, if you wanted to. I've got a recording of this. If you wanted to look back. But basically, for say, I'll do a quick one before I end the stream. Then sure, why not? Let's look at it. Say over here. If you flip this level, you're gonna go high. Okay. Um, Plenty of support resistance below you. Don't get it like confused. These are all weekly, old weeklies. This has been flipped. I can actually get rid of this now. So let's get rid of that. Right. So it's not as confusing. This was your 4 month. This is basically the low where we actually accumulated, right? Say we've been accumulating say for a long time. I've been very vocal about this on Twitter, on my streams, everything. One of my biggest position sizes, and we're up huge on this, absolutely huge, and we're nowhere near done. I want say to make new highs, right? We're nowhere near done. But for now, as long as if you keep closing them with this, that is your higher low you're looking for. You're probably gonna go and run B and go to T2 next, right? Exactly like Sui did. If you get below this again, maybe you come back down towards 30 cents. That's the two things I can tell you right now. But it's gonna be hard for me to tell you to buy here because obviously I was telling buy for so long down over here. But yeah, if you are looking for an entry, then I will do so with now your risk is going to be much harder to manage. 0.3785 below that I wouldn't own. Not even below that. It's actually treated like a zone. Below this is where I wouldn't own this. Right, let's take that wick low and let's take it to we've got these ranges here, you've got kind of body closes. Below this green box technically is where, as long as you come back down to this green box, you're still fine. Right? So that's why I'm saying it's so hard for you to enter say right now. There's no logical way for you to put your stop loss. So your risk management is out the window now, right? If you enter here, you're going to have to be happy being able to withstand this drop. And even then, there's no guarantee that this is going to hold. You might just go make some sort of double bottom. Right? If you get that, that'd be an amazing type to think about it. If you actually come back down to this area, even if it's a high low, right? This box I said is an area where I would accumulate again if you get that T2 return. If you were to get this box, say would be completely fine. It'd look even better, but you would have lost a lot of money trying to enter here, right? So not something I can recommend wholeheartedly. If you enter with reduced position size, that's the only thing I can say. We're already up 2x from our buys, and even as we currently speak, we are up like 74%, right? Huge amount. That's a big margin for you to be trying to DCA through. So I can't give you a good entry on this. In all honesty, like you can't really manage your risk that well on say. Yeah, I mean that's it. Right? The trend is left the station. That's what we're saying. So you either get one more shot, or you either get one more shot. If we get the T2 return down to these lows once more, if not, then this higher low is it. I think this is it. For example, on the weekly, what do we have? Let me delete this now. On the weekly, what we have is we have the fact that we have a buyer zone here now, right? Let me just put this down. That's a high volume sell candle. Here's your buyer zone on the weekly. There you go. So support resistance wise on lower time frame, you can manage your risk around this. As long as you're above 0.4389, you can target 48. If you get below 4389, you're targeting 40.87, 0.4087. Below that, 0.3785 to this green box we're talking about, right? What you're doing now is you're attempting to retest. So if you get, like any sort of retest, like this isn't technically a retest, this one is a front run, but breakout retest like this, that's where you get your lower time frame scalp entries. And this is how I'm scalping lower time frame. I have loaded key levels on my screen, and then from there I'm just literally reading price action, right? But that was the last good entry you had to try and take a say long. You don't have one right now where you currently sat. So either get a pullback or you're gonna have to basically manage your risk around. If you close the daily or the 4 hours or something above 0.4389 and such, then you can be like, I'm going to manage my risk around this particular area. You're going to drop down the time frame. Otherwise, it's just really hard for you to manage your risk. It's going to have to be lower time frame management, basically. Your opportunity for higher time frame risk management has gone out the window, right? Higher time frame wise now, all of this is fair game, and you'd still be fine. Say it could come down to 0.2845, make a higher low, it'd be perfectly fine. You've taken out your lower highs, right? Higher low, send it up again. So that's on say. Okay, that's say. No problem at all, bro. Um, Yeah, yeah. Um, on Arweave, okay, last one. Arweave, let me just show you. Yeah, this is actually the last one. Okay, I need to go get some food. It's like it's nearly 4 o'clock my time. I've not ate anything. So Arweave here. I saw some macro harmonics on it, I believe. Yeah. So my harmonics on Arweave are actually all the way from back here. Okay. This is like what I was doing with AVAX. I'm looking at the completed harmonics in the past. So there is firstly, there is a Gartley, right? 618, 786. There's a macro Gartley, which you're trying to recapture your bit of it for now. Past the macro Gartley, you also have a macro bat. Okay. This is a 2.618 of the bat. The 886 of the bat is marked here, right? This green box, basically. Our weave here would be amazing, right? Because you'd be saying, look, we tested the bat, we confirmed it, and you're going higher. But I don't care if you flip the 786 into support, we just play from there. Right? Trend is still lower highs and lower lows. This is one of those ones that hasn't even shifted trend yet, right? Locally speaking. So maybe we get one more pullback if the market dumps towards this. If you get RB between 15.663 and 10.788, right? That is a zone between which you bid, in my opinion. Recapture this, right? 20 again, reduce size bids. You're not going to bid on the way down fully. You're going to leave cash for the on the way up as well. Remember, right? Sizing back up. That way, you make sure you never structure for cash. You never fully allocate, right? Just discipline. But and let me just check. Do we have any like sharks or anything or bats? Um, no, if it's not going to be a shark, it's not going to. It's going to have to be a 1.618 on the daily, perhaps. Let's take a look. What's the low? The low is here. Sorry, the low is over here. Around there. Is it a 1.618? A bit deeper. No, it's really sharp. Nothing clean here. So yeah, yeah, like I said, I'm just playing this off of previous because I don't see anything like super clean here. Um, but yeah, there's your zone. If as long as you're below, look, you're rejecting the 786, you're probably going to drop back down towards 15 or some point. To be honest, your trend is still lower highs and lower lows. Trend hasn't changed on this. There is no signs of life right now, right? So back towards 15.663 perhaps. Let's see if we get it. Or you just enter when the 786 gets reclaimed again back into support. You do this, right? And you do something like this. That is where you'd enter. Size up on this and then just run it out. But that's AR. There's better alts in my opinion in terms of structure. But in terms of opportunity, this might be leading up to some good ones, especially if you go to those deeper levels here. 786, 618. Oh, nice. There's a body. I did not see. You to that week. Oh, you did it too. Oh, that makes sense. Hang on. Let's go from below. By. Oh yeah, yeah, I see it. There you go. Nice one, bro. Thank you. 722. Although I've not got like a 786 with the godly. 786 would be slightly lower, like over here. Uh, would be a 1.618 as well if you got this actually. I don't know. Hang on. How have I got different? Where did you put yours? Oh wait, no, yeah, yours is deeper anyway. Yeah, yeah, nice one. Sorry, I looked at that wrong. I thought yours was completed. Yeah, yeah. That'd be great, bro. Yeah. Nice. 1.618 and a 786. That would be very, very clean. Yeah, that'd be amazing. Yeah, let's leave that on. So yeah, that's extra confidence as to why we could go towards the back there, guys. Right, so basically this is the area you're going to be bidding, right? You've got old harmonic confluence and also newer harmonic confluences in this area. So perhaps we do get that lower on AR. But anyway, guys, that's it from that's was all good to go in now. On the higher time frame, yeah. If you're layering in, yes, okay. If you're laddering in, I've talked about it this stream. If you missed that part, just I'll put it on YouTube, watch it again. I talked about it in the last couple of streams as well. For these high time frame coins that are bottomed out, ladder in. Don't just one clip it, okay? You're not trying to one bang the thing. Just ladder in. Where's it gone? R U S D T. Yeah. Or just ladder in, right? because you're such low risk areas. This is an area you want to mitigate your risk at, right? Ladder in, there's your levels you want to DC at, should you go lower, have an allocation for that, have an allocation for the eventual trend shift, and you'll be fully positioned for the right side of the market when it's ready, right? Easy. Barb is definitely something you can build a swing on, not a scalp, a swing, right? And again, you're thinking months down the line, okay? You're not thinking, oh yeah, the targets are going to hit in a week or two. You're thinking months down the line, okay? For the target, you're giving time for this to play out. And if not, your risks are low, right? That's why you ladder in as well. Saga, I really want this retest. I don't know if we get it, but I would really love to get this retest on Saga. Still waiting for it. One last one I actually wanted to go over today, guys. I put it on my Twitter, but I was looking through some stocks. I know we don't really go through stocks much, all right? Under Armour, this looks so good, guys. I was looking at this. I was thinking, take a look at this. You have a macro 886, right? Look, low, pretty much a perfect bat over here, right? You have a macro 886, and then you have a shark for your type 2. You genuinely have a type 2, right? You genuinely have a type 2. And if you go onto something like the monthly, right, or the 2 months, and you look at your divergences building here, look, low, 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 high, 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 right? You have like, multiple drives, and like genuinely like multiple drives of bullish divergence forming here. Right? Look, multiple drives of bullish divergence. You take it back even further. Take it back even further. You have genuinely bullish divergence since 2017. Right? It's crazy. I think the Under Armour stock looks actually like it looks so good. It looks amazing. So maybe you get one more pullback on the three. It's a stock at the end of the day. It's completely different time frames, right? So you were at resistance. When I gave this on Twitter, I said, look, you're at resistance right now, so be very careful. So either flip for entry, or you wait till you come down to this order block for entry right here, right? But Under Armour looks good. If you're looking for stocks, like Under Armour is one where you could manage your risk, especially if you get hit, like if you ladder in, but especially if you're patient enough to wait for this or the flip, you can manage your risk so easily. And this is just like a to the B, but you can even go to the B for this or something like that. It's still gonna be, let's say, even just from the mid of this, it's still gonna be like 113, 2x on a stock. That's crazy, right? So I was just pointing it out because framework wise, this looked amazing, bro. Under Armour looks so good. So I had to share this on Twitter. Put it on the crypto chat as well the other day. But yeah, that's a high volume candle as well on the breakout. Yeah, this looks good, man. Over time, I'm gonna come back to this like year two down the line, see how it progresses. It's gonna take a while, right? But yeah, Under Armour looks good. Yeah, one last one. One last one. INTC looks good. Macro Shark. Okay, bro. I'll check that one out. I'm gonna end the stream here, guys, because my headphones are literally critical battery. I don't want to end it abruptly. So thank you very much, guys, for being always on stream every week for the support. I really appreciate it. Hope you guys enjoyed this. If you get if you have any other questions or anything, just ping me in chat, guys. And if anyone's interested in learning more about the way I trade, just reach out to me in DMs about any mentorships. But apart from that, just catch me in the streams, right? I'll put this on YouTube if you want to look at this again. And I will catch you guys in the chat. Okay. Thank you guys very much for this stream, for coming to my stream. Yeah. Love guys. See you soon. Bye bye. Thanks, Chris Howdy, bro.